A lot has happened since my last video, where the buyers have been running over the sellers for the last few weeks, but today we saw the daily candlestick print a bearish engulfing candle after hinting a bearish hanging man candlestick the day before, and price not only closed below the 5-day moving average, but also closed below the 10-day moving average as well, signifying a change of character for near-term price action. As I mentioned in the previous video, the bears kept getting ran over by the buyers as price continued to rebound off of the 5-day moving average. And today and yesterday, we saw price close below the 5-day moving average for the second day in a row. Another thing I mentioned in my last video, and I'll place a link to it in the description below if you missed that, but I mentioned I was on watch for price to pull back to the 525.30 level, where there is an unfilled gap. To fill that gap, however, price needs to test the 523.30 level. It may be too early to mention this, however, I'm also on watch for a gap down in the morning. If we see prices gap down in the morning, that could set up a potential island reversal if price is unable to close the gap. Meaning that if we gap down in the morning and price can't rise back up to the previous day's closing price, then the island reversal pattern would be confirmed in the short term, meaning that we should expect lower prices in the days ahead. Let me tell you a story. If we do see a gap down in the morning, normally in a bull market, we'll see buyers rush in to buy the dip and push prices back up to at least the previous day's close. I call that the gap close reversal strategy, where once candles for bullish hammers on a 15-minute time frame, then I load up on call options using a 5-minute candlestick for my entry, after I see bullish hammers forming on a 15-minute chart. I'll place my stop as usual under the first 5-minute candlestick. Where I bought at, look, you can always get back in, so I like to keep the winners big and the losses small, and you should too. Getting back to the story about the island reversal strategy, so if we see a gap down and buyers step in, I'll take profits before the gap closes on most at the 50% halfway gap fill. Why? Because if this does turn out to be an island reversal, and as traders we cannot rule that out, we have to improvise, adapt, and overcome each curveball the market throws at us, rather than try and guess what the market will do ahead of time. Yes, we can plan for multiple scenarios, but we must learn to adapt and refine our reactions so that no matter what happens, we have a plan. So let's say price gaps down and we take profits at the halfway gap fill, and if price does go up and fill the gap, then great, island reversal is cancelled, and the bull market is still in effect. But in the event sellers overcome the buyers at or near the half gap fill, then I'll be prepared to buy puts for a ride down to the next buy point, which is going to be near the 20-day moving average, currently at 518.90. That's the level I will again flip over to the 15-minute chart and wait for one or more bullish hammers to print, and then dial in my entry with a 5-minute chart and load the 523 calls. There is additional support at the nearby 50-day moving average, currently at 515.38. So I will be on the lookout for price to head that way if buyers can't get any traction and get above and hold the 520 level. Today, once price lost the 531 level, I started scaling into the 525 puts with the assumption we could see a test of that level I gave you in the previous video, 525.30. And that came true today. We didn't buy the ODTE options, but instead got the lower risk put options that didn't expire for another 8 days, as the implied volatility was still elevated from the Nvidia earnings release on the options that expired on Thursday and Friday. So I optioned for the more lucrative and much lower risk options that didn't expire until May 31st with the 525 strike, and those we got in as low as 107 and out at 269 each for a 150% gain. Here is the timestamped order fill. If you want to see how I trade these setups each day, give me a follow on Twitter. I'll leave a link in the description below where I post an occasional trade alert for free, so that after you've made some money, you can join my live trading Discord and get my stock and options trades in real time via email or Discord in real time. If you want to join the live room, it will be in the Patreon link in the description below. Yesterday I shared with my Twitter followers for free that I was buying the AMD SPY and SMCI call options at the end of the day for a Nvidia earnings play. And sure enough, Nvidia earnings didn't disappoint, and AMD opened up on Thursday at $5 up. SPY was $4 up, and SMCI calls ran from $650 each to over $1,650 each. Where we told everyone we were closing the position, yes, they ran even higher, but I never want to be the last man out the door. So back to the next buy point. As I mentioned in the last video, I'll really be watching to see if price can hold a rising 20-period moving average on the hourly chart. Well, price did lose that support level today, but it did find support at the next moving average that I'd like to watch, and that is the 50-period moving average, also on the hourly chart. After hours on Thursday, we see prices spike back up to the 20 period moving average on the hourly time frame to 530 to 522. So that will be an upside target for me once price stabilizes. But for now, I want to make a contingency trading plan. If price loses the 50 period moving average on the hourly time frame, then the next level of support will be the confluence of the 50 period moving average at 515.39 and the 20 period moving average near 520. The level or somewhere in between where there is a high volume profile node waiting. I wouldn't be surprised to see price open up there or fall quickly to that level in the hours and days ahead. I want to be a buyer at these levels, but the candlesticks today tell their own story, and that is the sellers were in full control today as each red candlestick was strong and much larger than the tiny weak green candles. Thanks so much for watching, and if you found this video informative, please leave a like and subscribe and share this video with your friends and family so that we can all share the wealth. Until we meet again.